All right. I am here today to talk with our Vice President Commercial, Michael Insulan. Thank you, Michael, for joining me. So it's one of these areas we want to take a few minutes and talk today because we talk here at Electra quite a bit about domestic supply chain and all of the things that are involved there. And I thought it was a great opportunity for us to share a little bit with some of the people that want to watch these videos that we do, a little information about sort of the broader supply chain and the global supply chain. How does that sound?
Yeah, sounds great. Absolutely.
So first of all, Michael, can you just give me a little bit of background on the cobalt export suspension that we've heard about in the DRC recently and what that all means?
Yeah, I mean, this is sort of semi-old news at this stage. The DRC government through ARICOMS, which is I had to look this up actually. I've always called it ARICOMS. It's the Authority for Regulation and Control of Markets for Strategic Mineral Substances in the DRC.
That's
They
a bit of a
imposed
mouthful.
yes, absolutely. Hence ARICOMS, I guess.
I guess.
This is a they imposed an export ban on cobalt back in February, on the 22nd of February. It was supposed to be a 4-month ban, essentially citing low cobalt prices and not enough royalties for the government. It makes a lot of sense. Cobalt prices, going into 2025, they were at the lowest point in nominal terms ever, or rather in real terms ever. And in terms of nominal numbers, we saw it back in, I looked through the numbers earlier this morning, back in 2015 and back in 2003. But in both those instances, we actually had cutbacks in production. And as a result, prices recovered. But this time, we didn't really see any cutbacks in production, and the DRC government, through ARCOMS, had to take some drastic measures, and I think for good reason, which I'm sure we'll talk about. So what happened, essentially 22nd February export ban, 4 months. That was supposed to then be abandoned 22nd of this month, June, when we're recording this. But on the 21st, ARICOMS announced that they would extend it by 3 months. So essentially now we're looking at an extension of the ban until the 21st or 22nd of September. So in total, seven months of no cobalt out to the DRC, which is a big deal
Wow.
because the DRC exports, they essentially account for about three quarters, 75% of global cobalt output, which is huge.
Yeah. So what impact is that having then on global supply and pricing?
Um, you know, in the you know, in about 2 weeks following the initial ban in February, we had prices go up from sub $10 per pound to, mid-teens, just over 15, depending on what sort of PRA you're looking at and what area of the world you're looking at. But, call it just about 15.50, depending also on what type of metal it is. But then it's stabilized there. Nothing more happened. And this is still below sort of long-term average prices for cobalt. And I think the extension on the ban essentially shows that the DRC government is not happy with 15, 16, even 17. I think possibly they will look at price probably higher than $20 per pound in order to abandon the ban. And I think definitely we'll get there. What happens, we're in the summer lull here, but after summer typically have strong restocking, and the stockpile that in particular the Chinese refiners have been drawing on over the past 4 months. It's not going to last forever. And when they start restocking after summer, and this is the expectation they have to, then prices are likely to reach a level where the DRC government says, fine, we'll abandon the ban. But then obviously they have a problem because cobalt has not stopped production in the DRC. There's still cobalt being produced, and you got to stop essentially this onslaught of cobalt hitting the market once the ban is over. And so the expectation is that the DRC government, through ARICOMS, essentially imposes some sort of quota system. so that you sort of filter out cobalt and grow that output, or rather the exports, in pace with the market. So you sort of stabilize prices in the, maybe it's $20 to $30 per pound region. Who knows about these things? I don't think it's in the interest of the DRC government to have, $40 or $50 per pound prices, but certainly 20 to 30 seems quite reasonable long term.
How does all of this affect Electra, and what are we doing about it?
So, how do we address this? Well, we've been thinking about this, as I said, for a very long time. Part of the story is keeping enough inventory, essentially, to be able to operate for a few quarters without having any, impact of disruptions in DRC output or exports or any logistical issues. And that is something we have worked into the business model. The second one is that, we do plan to run the business on a tolling basis for most part, certainly in the first few years. And our tolling partners are very big companies. They don't only toll through us, they toll through a bunch of different companies. So we would expect some swapping going on there, and potentially draw from the larger stockpiles within their supply chain should push come to shove on that side. Then, we are looking and we are talking to companies outside the DRC that also supply cobalt hydroxide. There's some in Europe, there's some in Indonesia, there's some in other parts of the world. So we certainly can source out of material should we have to source out of material. We don't necessarily want to do that immediately because DRC material is very good material. There is, generally speaking, ample supply. And so we want to do what most other refineries are doing, which is to go to the DRC and work with reputable companies like Glencore, like ERG, that run industrial large size mines and abide by the Responsible Minerals Institute and OECD and CI guidelines of doing these operations in the DRC. And then obviously we have talked about this before, recycled output. So when you recycle a lithium-ion battery, one of the products from there can be a cobalt hydroxide. We have produced cobalt hydroxide in our operation, and we intend to feed some of that cobalt hydroxide into our sulfate line. So that's another lever we have. And we can do that also with other recyclers in North America in particular, and in Europe. So that's relatively ample supply, actually, over the next 10 years. And then I guess two more that we thought about and that we have executed on. One is we are promoting other junior miners in our proximity. We have signed MOUs with Fuse Cobalt, with Nord Precious for future cobalt supply from them. And we're also working on a few other options in Canada and North America, and even in South America. And then last but not least, we do have a cobalt deposit in Idaho, which is a very good resource, high grade, and at some stage in the future, when the time is right, we may develop that into an asset that feeds our cobalt sulfate plant as well, of course.
Yeah, well, that's sounds like you put a lot of thought into these things, and that's awesome. What I'm taking away from this is that not only have we thought about this from a pricing mechanism in terms of looking at a tolling model, so that we're not necessarily facing those fluctuations of market prices that can happen from this, but also from a supply chain perspective and how those supply chain variabilities can be mitigated for the company to ensure that we have ample supply. So sounds like it's a pretty solid foundation on a go-forward basis. So I know you're a pretty busy guy, Michael, so I'm going to let you go and get back to the rest of your day. But I did want to say thank you very much for sharing a little bit of this information with us, and I hope you have a wonderful rest of your day.
Thank you, Heather, and you too.